investors can feel uneasy about investing during uncertain times. And the horrific Russian invasion of Ukraine is not helping. That's how Colin is feeling right now. Here's a voicemail that he left me.
Hey Andy, before the war I was planning on setting up a Roth IRA for my wife, but now with the economy in a downward slope, I'm wondering if I should wait a little bit or get in now.
Colin, thank you so much for reaching out about investing during uncertain times like this. This Russian invasion is horrible, and I'm hopeful that the world will continue to support Ukraine as it has been over the past month. Let's discuss your question. Is now a good time to invest? Well, let's assume you and your spouse are in your 30s based on your Twitter profile. It kind of looks like that. So in this video, I'm going to share 5 reasons why now is a good time to invest, especially for people who are decades away from retirement. And even if someone who is decades away from retiring is watching this video after the war is over, why it's still a good time to invest. Oh, while you're watching today, if you like what you hear, everybody, please consider giving me the YouTube triple thanks. That's hitting the like button, subscribing to the channel, and then commenting down below. I appreciate you considering it. Thanks. Okay, here's why now is a good time to invest. Number 1, if you wait for things to get better, you're buying your shares at a higher price. Uncertain times can be difficult for investors, that is for sure. This is your hard-earned money after all, right? Well, realize though, if you decide to wait until things get better in the stock market, then you'll be buying your shares at a higher price. When you do that, you'll be getting fewer shares, and in the long run, building less wealth. Let me give you an example. At the time of this recording, VTI, which is Vanguard's ETF that covers the total stock market, like all the stocks, is currently valued at $224 per share. The last time it was valued this low, it was June of 2021. So if you buy at today's prices, you're getting a discount. Shockingly, that low price of $224 was an all-time high for this fund. So I don't doubt that we'll be hitting another all-time high again. Now, when will this be? Will it be this year? Will it be next year? Well, let's discuss that in our next point. Number 2, no one knows what the stock market will do this year. Ignore all of the financial news experts that tell you what is going to happen with the stock market this year. You know why? Because they're guessing. They're guessing. Yeah, they might be educated guesses, but nobody really knows what the stock market is going to do this year. These people make their living from making guesses all day long. Yes, again, they might be educated guesses, but they're guesses nonetheless. Since they don't know, and since you don't know, and since I don't know what's going to happen with the stock market this year, we just need to start and keep investing as soon as possible. And we need to realize that the stock market will go up and it'll go down like a roller coaster for the next few decades until you reach retirement. Over that time frame, historically, it'll more than likely go up. Number 3, the stock market historically goes up in the long run. Over its near 100-year existence, the average annual returns of the stock market around 10%. Does it return that every year? Does it return 10% every year? No, but on average, over the decades, your ability to stay in the market in good times and in bad times can yield a 10% return. So even if times are uncertain today, investing today instead of tomorrow or 1 year from now will get you in the investing habit and take advantage of time. This may be one of those moments right now where the stock market is down, is way down. That's good news for new investors because you're buying your shares at a slightly lower price. Number 4, investing favors those who start early. The earlier you can invest, the more wealth you can build. Again, let's do an example that demonstrates waiting to invest for the right time. In this hypothetical example, let's talk about your wife. You mentioned in the voicemail, your wife's 35 years old in this example. She starts investing in a Roth IRA today with $500 per month in a total stock market fund like VTI. 30 years later, she could potentially have $566,000 factoring in inflation. Let's say she just waits 1 year to start investing in this Roth IRA. Her total drops to $524,000. That delay cost her $42,000. That gap grows even larger the longer you wait. Let's say she waits 2 years to start investing in this Roth IRA instead of now. That new total drops to $484,000, a delay cost of $82,000. My point is, start investing early and don't delay. Number 5, dollar cost averaging makes it easy. Deciding when to get into the stock market can be really stressful. That's why concepts like dollar cost averaging allow you to relax and let the market do its thing. Dollar cost averaging is an investing strategy that allows investors to invest equal amounts periodically no matter what's going on in the stock market. For example, your wife investing $500 per month for the next 30 years, no matter what, is dollar cost averaging. Over time, this has been proven as a solid and effective strategy for long-term investing success. If you allow automation to take care of the process for you, then you're not tempted to stop your dollar cost averaging plan. This way, you're buying consistently over time, no matter what. You're buying in good times, you're buying in bad times, and you're allowing yourself to ignore crazy market cycles and difficult global news like we're having right now. By ignoring that news, you can focus on what matters most, your family and your personal goals. Now, are there reasons you shouldn't invest right now? Yes, there actually are some reasons you shouldn't invest right now. Here are a couple of them for you to consider. If you have no emergency fund. Yeah, if you have no cash saved up for emergencies, you are setting yourself up to go into credit card debt if any emergency arises. I'd suggest holding off on investing until you have at least $2,000 set aside for emergencies. This can cover some deductibles and household emergencies that might pop up. Over time, I recommend saving 3 to 6 months of expenses as an emergency fund. Also, don't invest if you've got high interest credit card debt. If you're paying high interest credit card debt, you're paying more in interest than you'll be making in the stock market. For example, the average interest payment on a credit card last year was 15.91%. Making that much in the stock market consistently is very unlikely to happen, but you are guaranteed to save that amount by paying off your credit card debt. For that reason, I wouldn't suggest investing in the stock market at all until you are credit card debt free. That doesn't mean you have to cut up your credit cards, but you need to be paying them off in full every single month, no matter what. Okay, let's talk about how to get started with investing. Perhaps I've convinced you that investing now, no matter what's going on, is a good idea. Great. You mentioned a Roth IRA in your voicemail, Colin, and others might feel the same way. This is a great place to invest. So what's so excellent about a Roth IRA, Andy? What do you got, man? Well, for starters, this retirement account grows tax-free. You can also withdraw 100% of your contributions at any time without penalties or taxes. That's your contributions. Also, your options for investing are plentiful. You can have mutual funds, bonds, real estate, lots of options. And index investors who are working towards financial independence also really like Roth accounts. Speaking of index investing, this is my preferred way to invest, especially when it comes to a Roth IRA. You get excellent diversification, low fees, and your funds are self-cleansing. When one company isn't performing well, they get kicked out of the index. You don't need to adjust anything. If you're looking for a partner to start your Roth IRA, I'd suggest M1 Finance. M1 makes it simple to build your portfolio and automate your investing strategies. We talked about the importance of automation. I've been a customer of theirs for the past year, and the interface and app is really, really slick. Much better than some of the older investing platforms. They're a great place to open your Roth IRA for free. Check out my link in the description below. If you use that link, everybody, you are supporting this channel, so thank you very much. Outside of the Roth IRA, the best place to start investing when it comes to your retirement is with employer matching funds in a 401k or a 403b, because that is free money. Let's say your company matches 50% of your contributions per year up to your first $5,000 of contributions. If you decide to do $5,000 of contributions, then your company will also contribute another $2,500. That's $2,500 of free money. Some companies are also doing this with their HSA, the health savings accounts programs. If you contribute to your HSA, they may match a portion of your contributions. My point here is to check with your company to see what matching benefits they provide for your retirement and your future healthcare costs. There may be some free money laying around waiting for you to snag it. I hope that helps you decide if investing now is a good idea. In the end, timing the market is a game most everyone will lose. Time in the market is easier and more effective. Studies show when markets go up, people buy more shares. And when markets go down, like it has been this year so far, people sell more shares. This is the exact opposite of what we want to do, right? Well, why do we do this? Well, it's because we're emotional beings. We're illogical at times. We are human. That's why I like to take the logic and the reasoning out of my hands and automatically put the same amount in my account each month, no matter what. That way, no matter what happens, I'm building wealth and keeping my emotional self away from my money. And I'd suggest the same for you. Well, enough from me, everybody. Tell me what you think. Do you think it's a good time to invest in the stock market right now, or should we wait? Please let me know in the comments below. This is Andy Hill from Marriage, Kids, and Money, signing off. Carpe diem.